If you want to keep track of what's going on at DTI, make sure you go to dtitrader.com/telegram. You can also keep up to date with dtitrader.com/YouTube. We have the live YouTube audience here with us. Great to see you guys. You can also view past replays at that site, dtitrader.com/YouTube. Now, we're going to be talking about trading, and whenever you talk about trading, you've got to talk about risk. There's a very high degree of risk involved in trading. You and you alone are going to be responsible for all the decisions you make, so make sure you do your due diligence and searching things out and doing research on your own, hopefully confirming what we're looking at. But if you find something different, certainly raise the question. Past performance is not necessarily indicative of future results. So let's get to the news, and it's really not that different, Tom, than what it was yesterday. The DHS funding issue. We are going to have a partial government shutdown. Congress is taken off. I looked at the headlines. Congress jets out. They're going to be gone for a little bit, so this shutdown is going to be a little bit longer, but it's also only a partial government shutdown. 2 weeks ago, we had a full government shutdown that didn't last that long. Here, we've got a partial government shutdown, which may last a little bit longer. The big news this morning was CPI. We like to keep track of where the market was at the time that certain information was released. The CPI pivot number, Tom, you'll get a kick out of this one. 68.3850, 100 points below the open of the month. Coincidence? Maybe. And of
Wow.
course, and of course, it's a holiday weekend coming up. We got the rest of the day. We need to make something happen here in the market. Uh, Tom, quick reminder for you, Valentine's Day. You already got that taken care of, right?
Absolutely.
All right, I know you do. President's Day coming up on Monday. That is a holiday. We're going to have the stock market closed. Futures markets will trade. We'll have the open of Tuesday's market on Sunday night. It's a little bit confusing, but we'll also have a midday halt and then resuming trading. So you've got a very long Tuesday in the futures markets. No Monday trade date. That's the big thing there.
Right.
And
Stop there. Everybody understands the market will trade Sunday night. The futures market will trade Sunday night. Everybody understand that. Need to know that.
yeah, definitely. And you're going to see this with most Monday holidays. We had one in January. We've got a few more coming up as the actually, how many more do we have? We've got what, Labor Day and Memorial Day after this one, as far as the Monday holidays. That might be it. I think that's it. So Monday holidays, they kind of punch them all up at the beginning of the year, and then we got or was it Labor Day hanging out by itself in the back half of the year. All right, so let's get into what we're seeing in the market. And Tom, you expressed a bit of an opinion earlier. Of course, we weren't recording then, and we've added quite a few more attendees since that time. So, what are you seeing in this market, Tom?
Well, first of all, the market continued its sell off and went lower last night. We went down all the way to this morning's opening down at 68.09. Write that number down, 68.09. And then you could tell at 10 o'clock after that first 30 minutes with the opening price halfway on that 30-minute bar. In other words, it went down spike low, opened at the halfway point, and then took out the 10 o'clock high, the 9:30, 10 o'clock high. That was your first clue that the market was not going down. The second clue was I gave a pivot number this morning of 68.75. And eventually we got above that number. We've been holding above it. We're currently about 68.80, been as high to that resistance point of 95 so far. The big number on the other side of that is at 69.02. Does everybody know where 69.02 lies in the spectrum? That is the yearly open, 69.02. So you see, we're sort of in the noise zone of the market. You don't want to make your mind up and say, hey, it's going down or up right now. You want to be flexible. By the way, February has a history of doing this during bull markets. They will get everybody short, and then all of a sudden you'll go to sleep one night and wake up and it'll be going downhill. Well, let me say it another way. It will be climbing new heights, okay? New heights, and you'll be sitting there going, what's going on? As you end up in March and finished out the quarter. So sort of like a typical February is to do what it's doing and what we got to do about another few days here. But I remember when I started in this business, I told the story yesterday. I started in this business. We had like, I think it was 5 weeks in a row of February going down. I remember thinking, man, this thing ever go up? I went and talked to a veteran in the office. I said, hey, we've been down 5 weeks in a row. He said, oh, February's always get soft. I said, really? So I guess it's been happening his whole career, seeing the same type action about February. And so anyway, it is hanging pretty close around this zone. But a lot of good news is out there coming down. I gave 5 new stocks. I want to add to our 3-day algo: Walmart, Johnson & Johnson, McDonald's. And here's one: Peabody Energy, BTU. And then one that I found about a week ago called Sky. You gotta love the name Sky. It's I think it's a forerunner to what's happening or gonna happen in the housing market this year if you watch Sky. I've been watching it all week. Even today, yesterday, it's been creeping higher. And right now, if you look at Sky, it's about 94.76. This is not short-term plays. This is plays that you might want to start nibbling on. Okay? And we'll talk about that when we get to the 3-day algo. Another discussion I had with a student was I said, look, nobody's right 100% of the time, but when you don't understand about the current trend, okay, I use a phrase, if you ever hear me use it, it means VIX is too high, meaning above 20. If I look at the VIX today, if you look at the current price of the VIX, let me give it to you. It fell off that screen. Hold on, let me find it real quick. VIX, let somebody type in VIX futures I use, okay? VIX futures is back below 20. Doesn't mean we're out of the woods. All it means is it's backed off from yesterday rising. A rising VIX is market turmoil. Write that down. Don't forget it. I watch that VIX pretty close. Typically, it'll stay between 16 and 18 and a half, but it starts breaking out, gets above 20. That's when I start pulling back. It helps me keep a lot of positions from coming and bite me. I'll tighten up what I got out there when I see that VIX rising like that. And now it's pulling back a little bit today, which is a good thing, okay, in my opinion.
All right, Tom, and you mentioned some of those big numbers. Let's take a look at some of these market numbers added to what we had yesterday, changed a few things up. Number one, you've got a new low of the day, 68.0875. You mentioned that one. I mentioned the news pivot at 68.3850. We're above both of those. Most recent reference bar for us here today, the Genesis bar from earlier after the European cash close. The low of that bar is 68.64. The high 68.8975. And of course, the big one is the open of the year, 69.02. Big question, can the market get to that number? That'll be a big deal. And as you mentioned, we're above your pivot number that you put out in the TNT channel this morning, 68.75. And by the way, if the market decides to, get some jets underneath it, 69.3850 is the open of the month, and 69.60 quarter the open of the week. Those would be the next two numbers above 69.02 that you want to pay attention to. So
And let
those
me
are
just
the
say something. Let me just say something. How do you use these numbers? Is what you ought to be asking, especially if you're new. Here's the way you use these numbers. You look at the current price, 68.86. If you plant the current price inside there, it tells you got resistance at 68.8975 and support at 68.64. Does everybody see that? So if it broke 64, that means this rally would face pressure. And then you go check the VIX out and see if it's back above 20 if that occurs. Does everybody understand how to do that? So I gave you this ladder to give you a roadmap how to recover from how the downfall that we had. And that's the numbers you're doing. This morning at TNT, Wall Street acted like there was nothing out there, but if you looked at the S&P, which was 20 points lower than where we closed yesterday when I made that post, I follow the S&P. I don't look at the real-time news. I follow the S&P. Why do I follow the S&P? Because 75% of all these tickers follow the S&P, even gold and silver. You saw a little bit of that yesterday in that sell-off, okay? Even gold and silver. So this is a numbers ladder that we're building here for you. We'll keep it current throughout the rest of the month. These are good numbers to help us navigate where support risk. Any questions about this slide? If I was you, I'd take a picture of it and use it in conjunction with the reference bars. And then you see it all play in together. I think it's great. Okay.
All right, and also keep in mind we got another number that's going to be added to that ladder pretty quickly as we open up RB4 in about 15 minutes. Pay attention to that next reference bar. It's not going to replace the Genesis bar, but it will add on to it. We just cycle those reference bars as we go, augmenting the list of numbers. So keep an eye on that. Now, if we go to our next slide, I think it's time to
Let
begin.
me put this out there. Just make sure I got a bunch of new people that's joined me. What I did today, Graciela, I hope I say that right, Graciela or whatever. How would you pronounce that, Chuck?
I would say Gracie, good to see you.
Yeah, great.
Uh,
Sounds good to me. Anyway, what I did today, I thought that it would be better with the holiday to join all my public appearances to this afternoon because what I'm going to show you in RB4 is going to sort of blow your mind in a little bit when we go to that slide after we go to the live market. So I will talk about every subject you want me to talk to. I'm going to be with you not 15 minutes, 30 minutes, or an hour. Any subject you want to talk about, we'll open it up for questions once we get to the live market. Fair enough, Gracie? I want to be real careful right now.
and of course,
Real careful.
when it comes to trade and trade, it's not just this one presentation. We got a special time here today because it's the end of the week heading into the holiday. Typically, guys, train and trade Monday through Friday, uh, 11 a.m. Eastern. Now, Tom, we're not planning anything for Monday, are we? Because that's the holiday, or do you want to do something special then?
Well, I think what we ought to do, and let's just think about this, we probably ought to have an open house Monday night at 8 o'clock. Uh, that's when we normally have futures trading. Why don't we do that? Have an open house Monday night, let everybody have Sunday off,
Okay.
and we'll just do that. Does that sound like a good plan, all you people? Meet Monday night, Sunday night at 8?
Sounds like a great plan. Are we then moving futures
Oh, Chuck,
first?
I know how you're going to vote. I want to see how they vote.
Okay. Are we then moving futures first up to Tuesday in that case?
No, I'm going to do futures first as an open house Monday
All
night.
right. Sounds great.
Let everybody breathe. Got to breathe. Anyway, train and trade. If you want to know what's happening Sunday night, I will keep it open and make postings as necessary until we get to Monday night. That's my plan.
All right. And if you want to keep track of all the trades that are going to be occurring with Train and Trade, make sure you join T-Buzz Talk and Trade, dtitrader.com/TNT.
What a
All right.
program that is. Tell them
And
about our resources, Chuck, that we put together.
so resources here, we got Tom's first book, Winning the Day Trading Game. Got a link there that you can click to have access to that. Certainly worth a read, if not a listen to. I think you can get the book on audio. We'll have to double check that, but I know you can definitely grab a few pages. DTI white paper booklet for those of you looking for a little bit of extra information about some of the stuff we're talking about to clarify things. We have Tom's YouTube page. Those of you who are logged in and visiting us on YouTube, you know very well about that. For everybody else, dtitrader.com/YouTube. Uh, Important terms to know, a little bit of a terminology section here. And then, Tom, this is one of my favorites, the penalty tape. This is from a presentation that Tom did. We won't say how long ago, Tom. I think your hair was a little bit darker shade, and mine actually existed. So, it was a while back. It was a while back. So, but great tape there. If you ever get a little bit lost in the market and you want to find your way
Let's have
back to
some
the
fun. Let's
fundamentals,
have some
yeah,
fun. Is that the link for the penalty tape right there? You click it, right?
it should be. Yes, sir.
Let's have some fun. Monday night, we will give away a very special prize to anybody that takes time and answers a few questions. I'm going to do it too. I'm going to listen to the penalty tape Monday night. When we come, we'll give away a very special prize Monday night for those that listen to it, and I'll test you on certain questions before we do the drawing. Does that sound like fun to kick off Monday night? Add a little extra fun here because I think people will have a lot of questions about it. Okay, and we'll make it happen. We'll do something really fun. Okay.
All right, so that's an augmentation to the plans for the weekend. Listen to that penalty tape
Go
and be
for a
ready to go
walk,
Monday.
get a good walk, and try to remember because that penalty tape. When I first started DTI, I think it was so good. That's how people found out about me years ago. But I want to listen to it myself. Just go back and listen to how things have changed a little bit, but just go back and listen. There's a lot of great advice here, I think.
And of course, one more resource on this list, the Options Playbook, optionsplaybook.com, for those of you who want to understand a little bit more about options and how to use them in approaching the market. So, Tom, it's about time to go ahead and look at our FTD stocks. And I'm going to bring Jonathan in and let him go
Rod
through that
says
with
none of
you.
those links work. Is that true, or is she not doing it right? Jonathan, that's your line.
Now they should all work. Let me post the slides again. Click on the link for the slides. Don't click on the screen. Click on the link for the slides in the Zoom chat.
Okay, tell him again. You said that fast. I want to hear what you said.
What I said was do not click on the screen, your screen. If you click on your screen, it's not going to work. But if you open up the Zoom chat and then click on the slides link that I'm posting in right now.
That's probably exactly what was going on. When you're looking at the screen, you're seeing the image. If you go into the slides, you get access to the information.
So you click on the slide, then you click the link. Is what you're saying?
Yes, sir. If you're trying to click on the link in the visual representation here, it'd be like trying to click on your favorite actor
So
in your
don't
favorite
confuse
TV
me. Keep
show.
it simple. Click on the slide. Click on the click after it pops up. Right.
Exactly.
Slide number 8. By the way, if you're in the silver wheel, I will not be doing a silver trade today. I'm going to take the weekend. We'll roll it out Monday. Okay. Couple questions there. All right, that's the resource. Just go to the 3-day algo and find out where this market sits. Take it away, Jonathan.
This is slide number 9. If you click the link on the slide number 9, you'll get this document here, which is what we called our first 3 days document.
I want to call everybody's attention to something. Y'all see ZB is long? ZB is long. What does that mean when ZB is long? Does anybody know what it means about interest rates? Interest rates are going down correctly. And I will tell you, our anchor program, Jonathan told me this morning, closed out 2 big wins this week. And so we'll talk a little bit about anchor during this presentation. That's great news. I think it's going to be more as we head into May. Anchor ought to be a go-to place to pick up some dice, so to speak. Anchor, okay? Peg says it's surprisingly awesome. You ought to copy, let everybody see what Peg says. She's new, okay? Interest rates will be going down. So if you're going to buy a CD, probably ought to buy it sooner rather than later if you're buying a CD, okay? All right, what else we got? That's TLT matching with that. Bitcoin still short at that number. Look at the 3-day low on Bitcoin. What do you got? 3-day low, 72,000, and we're 69. You got to get above that to even have a chance for Bitcoin to warm up to the world. 72,000. Okay. You come on down, the diamond still bullish. The financial index, a little bearish. Utilities, you've been hearing a lot about electric bills and what's happening there with the data centers. Obviously, very bullish for them. Gold, NIM has been a great stock for us. I remember we started talking about it about 30 and look at it now, 128. Yeah, come on down. You got, I'm trying to see. KGC, we bought that stock at 5. Right in here, we bought it. $5. We've held on it all this time. It's at 35. That's 7x, folks. 7x. Listen to me on gold. I'll get you straight. GDX, good. Got a bunch of shorts there. Apple has malaria. Just kidding, of course, but Apple is sucking high. Well, I won't say that. Apple is not doing well. Amazon, Google, Meta, Microsoft, and NVIDIA are on the defensive, and I think that is pretty interesting. Okay, keep going. Now we got AppLovin it fell from grass as a hot stock the last December. It's already took out December's low, very bearish. Here's the one I was talking about. Look at Walmart. Walmart. Do y'all know how to enter a stock long term? Let me ask that question. Okay. Does everybody know how to enter a stock they're trying to hold for the year? I'm going to give you a real simple approach that works. You want to hear it? Let's say you're going to put 10,000 in Walmart, right? Okay. So the way I do it, which I think is the best way to do it after all these years, here's how I do it. If I'm going to put 10,000 in Walmart on a Tuesday, okay, what I will do, I will buy a third of it. By Wednesday, if I'm making money, I'll buy the second third. By the end of the week, if I'm still making money, I will buy the third third. That's how I do it. 3 different times into the stock with the dollar amount set at the very beginning. Everybody copy how to do that. That is the best way I know. The nice thing about doing that, letting the market tell you is your timing is right. You're going to be making money if it's going up. If it's not, you pull back and wait, okay? What do you do if you're losing on the first tranche? Great question, Peg. Well, you look at what took you long, and then you take the low of the week and you step aside and wait for another week. You understand what I'm saying? So if you're at 100, 105, 100's the low, goes below 100, then you get out if you're losing money on the first tranche. Great question. Never had that question asked in all these years. Very intuitive. Okay? That's a real trader there. Okay. Long Walmart. Looking good. All right, let's keep going. All right, we've got Sky. That's the one I was telling you is long. J&J is long. McDonald's is long. 4. I think the only one of those 5. Do you have BTU there? BTU is not long yet, right? It needs to get above 36, right? Yep, BTU. All right, so what we've learned today, looking at the 3-day algo, not everything's going up, right? But if you want to play the stocks going up, you find that column above the 3-day high for February. I think it's remarkable with the choppiness we've had in February, anything is above it. By the way, that grid stock, I own a little piece of it. It's done fairly good so far. Grid. I'd put it in the category of long term. Usually if a stock is out there like this, you take small pieces and then build upon it. I call it pyramid. Okay? Any questions about how to use the 3-day algo? Any questions at all? I think we covered that pretty good. Y'all learned something so far? Gracie, it's pretty simple based on numbers. Got to be higher than a 3-day. If it's lower than 3-day, you're fishing in the wrong pool. Like if you were long Apple right now, you're fishing in the wrong pool. That's why you're losing money. Perfect. That's great. All right, let's go if we can. We'll come back to this, John. I want to go to a live market now, if that's okay.
Yep. I got the S&P on the left, and I got a chart of that Sky stock you were talking about on the right.
Okay, let's do this. Let's put a dashboard in there.
Okay, the dashboard's under launch. I'll get a new one added here.
You start out with the E-mini, NASDAQ, Dow futures. Okay, then let's come in with Sky. Johnson & Johnson. Walmart. McDonald's. BTU. Oh, put TLT in there too. Got to tell you TLT. The TLT is how you trade anchor. The reason I put that in there. Okay. So open it up where they can see. That's the buy zone and sell zone. We just started at 130. Here's how you read it. Okay. If you look at the buy zone for the E-mini, does everybody see the price it says is push the chips to the center of the road? Because 75% of stocks will go up if the E-mini goes above 69.02. Give me a yes if you understand that concept. This roadmap's great, isn't it? Look at that. Okay. So if it goes above 69.02 and you look down there and you say, Sky needs to go above 94.84 to turn green, okay? Okay. Wendy says the roadmap, she's been trading for a while, the best thing she's ever bought. Thank you, Wendy. Hey, capture that one. We'll use that one. That one makes the top 10 of the year. TNT as well. Okay, so it gives you trigger numbers. Y'all know how I use trigger numbers in TNT. Give me a yes of those people in my TNT, my 24-hour trade room. How many people know how to use trigger numbers? Okay, so if I do that, I'm looking for a way to trigger me in. I do it through power. I do it through everything I do. So if you look there, I know that J&J goes above 244.50, I'd say 44.55, I'd buy maybe some options on it. If Walmart got above 135, John, can you circle that where my eyes are, where they can see the buy zones? Yeah, right there. These are the trigger numbers here on RB4, okay? And BTU's there, 34.45. TLT above 89.72. It's at 89.64. It probably set up. Put SLV in there and gold also. Put gold and SLV. See what they're saying. And there's the numbers for those two. But this dashboard is very helpful around the clock, and it's also very helpful if you trade futures to plug your stuff in there and use a dashboard, okay? Because RB4 happens to be a very reliable time, not to day trade, but to put spread zone or outright stock and all that on RB4, okay? Has everybody got that? Now see, J&J just turned a little red, so it's basically correcting a little bit, okay? Put J, just look at the chart on J&J. Y'all see that chart there on the 30-minute J&J? It's basically telling you right now, it's just correcting. Put the daily, go to the daily chart on J&J. You see how that looks? It's basically saying you're in the top half of the bar. So if you had something in J&J, you'd hold on to it. It's just saying it's pausing in the act. Okay? McDonald's just turned red. Put McDonald's on the daily. See, it's doing the same thing. McDonald's is bullish, but it's correcting. That's all it's doing, correcting. Now, what time do you really pay attention to the reds and the greens? Great question, Tom. From 1400 or 2 o'clock to 2:10 is when you do it. 2 o'clock to 2:10. Don't make it complicated when we've got all this work done to give it to you on a silver platter. Okay? So looking at the market during RB4, what is the market's message to you right now? We're only 6 minutes into it, but the message is hold tight. Don't do anything. I know that's a strange comment coming from somebody who trades as much as I do, but you don't see my hands near a mouse, right? Now, let's go to TLT. Let's talk about TLT. TLT is one of the best automatic and analytical programs we got. And what we're going to do, I think a good way of doing it, John, if you got a few slides on TLT or just one slide, what do you got?
Yeah, just a few slides, and then Adam gave me a video to play.
All right, let's go do that because what we're going to do, we're going to be with you beyond the video today. That's why I did 1 to 3, okay? So anchor, what are they looking at when they get this?
Well, this is just a recap basically of the trade we did yesterday and it hitting profit today. I'll let the video we play explain more about, all the details that it gives you. But that's 3 straight winners in the past week. We had a trade last Friday. We had a trade.
In this crazy market, Anchor's just cooking with gas. But also keep in mind, makes the odds even more strong. You got the bond market breaking out, meaning interest rates are coming down. Because I don't know if y'all noticed this morning, for all the talk by the Fed about inflation, Actually, you got a little disinflation going right now. I believe what one of my students told me. I hadn't read the report, but based on the market, obviously something's working out there. Instead of going up an average of 5% a year, 20% over the last 4 years, you're basically backing prices down a little bit, which is pretty good because the philosophy, there's two philosophies. Y'all want to have a little economics course before we go in this? I promise I'll make it simple. Probably save you the price of a 4-year degree. Okay. Y'all want to hear how I think about it? Okay, it's very simple. If supply is increasing, it offsets demand. That will lower prices. So you can have growth by increasing supply. Things like reducing regulations. Did y'all see where they cut out the 2009 Act that added, I guess, catalytic converters to cars and all that? Well, that's going to lower the cost. So supply is going to increase because when price goes down, people buy more. Proven fact, okay? So think about inflation as two parts, like a supply and demand. In the past 4 years, you had government spending money, okay, right? Which people had more money. They had money, but the supply was down and the prices went up 20%. Not the right way to do it. Always think increase your supply. You can grow an economy by, that's basic economics. You have to grow supply. That's what's going on right now. When you see tax refunds, you see all this stuff, there's a balancing act going on. And that's the reason. Price of crude, if you remember, just a short, year and a half ago was pushing about $4 a gallon. Hey, just for fun, before we go into this, tell me what crude is or gasoline is in your state. Type your state, what you pay for gasoline. I'm just curious what it is around the country. I know here in Florida it's down big. $2 by bill, $3.30, $2.19. Frank's from California. Now, would you say, Frank, I hate to call you out, but his paying $5.29 a gallon for gas. You think they might have the wrong policies? I'm just saying. On the surface, it looks like California is paying twice what everybody else is for gasoline. Pretty interesting, isn't it? And the other thing interesting about the importance of crude, it's in everything that we do. Virginia's got 249. Harry said Alabama's at 255. All right. Pretty good stuff. I like doing that with the group because you get a real true survey of what people's doing out there and have a good time with it, right? All right, so Jonathan, why don't we play this short video and then we'll come back, answer any questions, and go to our next part of the market. Because by that time, RB4 will be completed. Who knows? There might be a trading opportunity. Take it away.
That really is quite unique. Now, a lot of times you'll hear, hey, this is unique. And what they mean is, they use an 8 moving average instead of a 9 moving average. Oh, look how unique it is. No, this is actually really unique. The way that it functions, how the asset works, and then the data behind it, I think, is really powerful. So I'm excited about this. You guys know me. I'm a math nerd. I'm a data nerd. So as soon as Jonathan and the DTI team showed me the stats, I was pretty excited about it. And then as Tom and I have talked about it, I've gotten more excited about it. And we're going to dive in. Now, before we dive in, you guys know the drill. Profits performance, not typical. Obviously, no one in here is making guarantees or going to say we can see the future. In fact, this is really the opposite. We're not trying to predict anything. We're just trusting the data and the edge that we think we found here with the research, which shows about a 79.4% win rate. It's a little bit higher now because we got a winner on Friday, but a little bit higher than that. And then average winner a little over 18%. So that's kind of in that juicy income. We're not going for 100%, but we're not going for 5%. We're in that juicy income range. Average winner is about $458 on a $2,500 stake. And one of the nice things about this trade, which again we'll talk about later, it actually has a lot to do with why the trade works, is how cheap it is. About $80 a contract for the average trade to get in. So if you guys are not familiar with trading risk and all that, you can go to the DTI homepage, but I'm sure most of us in here are adults and we kind of know the drill when it comes to that. By the way, if you guys are here and you don't know me, thanks for being here. I'm Nate Tucci. Tom and I have worked together now for about 5 years, I guess, 6 years. So it's always fun to work with the legend and get to talk about trading ideas. And so a few months ago, I got an urgent report from him and the team claiming they had a new way to find income in the stock market, one that works completely differently than what everyone else is doing. It's not a matter of predicting some AI acquisition or penny stock. It's not trying to figure out whether gold or Bitcoin is the real true store value over the next decade. It doesn't even depend on getting a single thing right about any regular stock. And I mean that sincerely. It doesn't matter about a single stock and what your prediction is. Tom claimed that as long as a $58.2 trillion market doesn't go off the rails, his special trade has the power to pay out about $458 in under 48 hours, almost like clockwork. And that's based on just a small $2,500 stake. If you did a 10K stake, you'd be at about $1,832 on average in 48 hours. But really, that's not the best part. Unlike most methods, it literally doesn't matter what regular stocks are doing for this particular trade to work out. So if you go back to August 2024, it's a perfect example of this because you guys probably remember it was kind of similar to last week. We had the S&P get crushed, tore down about 8% in 9 days. And the headlines were brutal. You know, stocks tumble, jobs report, tech rout continues, Dow closes down 600 points, NASDAQ enters correction, weak jobs, stock market coming near crash range, NASDAQ confirms correction as recession fears mounts, and then fear, just like I said recently, was on the rise as well. Yet, during that turmoil, which you guys remember, that crazy flush, we got a quote-unquote stable trade. That's what this looks for, stable trade. So you can notice on August 4th, when all that craziness was happening, we had a bullish stability play with a 12.3% income opportunity. And as you can see, that green profit zone is where you make money. It was landed comfortably in there for a stress-free trade. Now, after reviewing the data and placing a few of these trades for myself, I told Tom we need to go live ASAP and show people this breakdown. Those are just my last couple of trades, just a couple contracts there, made a couple $100 for me. But before we go too long, let me be very clear here. What Tom showed is amazing. And I've never seen anything that works quite like it. And frankly, I wish I'd thought of it myself. But just to be clear, there's no guaranteed hacks in the market. Like any strategy, there's bound to be winners and losers along the way. So as I always tell you, don't come into this expecting to hit it big with the next trade. That's not what today is about. Actually, quite the opposite. This research is designed to uncover significant edge that if it performs like we expect, we can generate a really nice stream of income over time. So we're not trying to go for a millionaire trade Monday or Wednesday or any particular day. It's about how much can we compound a winning edge through good markets, bad markets, and everything in between. And this strategy in particular doesn't care if the environment is bearish or bullish, which means the income we generate on this trade could be a little less white knuckle and a little more coffee on the front porch swing, if you know what I mean. A little more, hey, things look pretty good, a little relaxing versus let me stare down that 1 minute candle and hope it doesn't make or break me. So if carving out a stress-free piece of that $58 trillion market sounds even a little bit interesting to you, well, congratulations, you're in the right place tonight. Because the man behind this discovery is going to walk you through exactly how it all works in just a minute and invite you into the private Telegram where these anchor trades are generated automatically, giving anyone following along the chance to target $458 or more as early as, I should say Monday, as early as the next trading day. So welcome to the Anchor Trades briefing. Like I mentioned, my name's Nate Tucci. Most folks know me from opening playbook or closing playbook, where I'm live nearly 2 hours a day teaching traders. But my students usually know me for my obsession with unique income strategies. That's really what I kind of obsess over, racking up over 230 wins so far this year with close to 80% accuracy across all my different income techniques. And that's why I was so excited when Tom showed me an income concept that I'd never even considered before. It's essentially a way to hijack a certain asset and it flips traditional income on its head. So the man behind this discovery, as you probably know by now, is the legend Tom Busby. Tom got started way back in the 1970s. I shouldn't say way back, Tom. That makes you look old. I should say he's a veteran from the 70s. And since then, he's been featured all over the place. Bloomberg, CNBC, CNN, all the places you would expect. And his books are still one of the most valuable resources that are out there for traders of all levels, whether you're just getting started or you have been in the markets for decades. And much of Tom's success dates all the way back to when he got handpicked to get the Globex terminal, and he was one of only 50 in the world to get his hands on that, which really opened him up to the 24-hour market. Now, that gave him insights to the market that really almost no one else had in the time, and it even helped him manage a firm so successfully that it eventually got bought out for $1.3 trillion by Morgan Stanley. And as you'll discover today, the key numbers that Tom invented all the way back then actually still play a vital role in that new discovery that we're talking about today. Now, Tom is no stranger to helping his students pull cash from the market. We get stories from, his top students across his services nonstop. Like Bruce has said, when I fall, I make money. Tom is committed to helping you. Bob said $2,000 today. Emmanuel said $2,200 on one trade. Keep up the good work. I just pulled a couple random ones out of there because we get a nonstop flood of feedback and testimonials from Tom. But today, Tom promised to show what he thinks could be the most consistent cash flow opportunity that he's uncovered in over 40 years. So, Tom, first off, thanks for doing this on short notice and making your schedule. And second, why don't you jump in here and tell everyone what this is all about?
Absolutely. And one key word in that previous slide was consistency. This is a consistent approach. And Nate, I'm thrilled to be here today and to give everyone a shot at some extra income with this brand new, very unique trade. Our back testing shows this anchor trade would have paid an average of about $458 in extra income on the winning positions. Now, our data shows a winning outcome around 80% of the time. And Nate, $450 using a small $2,500 stake to do the trade. If you put $10,000 in this, you can take it up a level, knowing the historic win rate and controlled risk. The average win would jump to $1,832.
Yeah, and I don't want to cut you off right as you get going here, but you did mention risk, which I think people are going to realize is a huge part of anchor trades. And it's actually, it's funny, you don't usually say this on a webinar, but I think the risk part is the part I'm most excited to show people because of how it works differently in this trade. So I'm not going to spoil it right now, but I will tell you, when we say $2,500, we actually don't mean that you lose the whole $2,500 when you're wrong, like most income methods. Most income methods, you throw $2,500 out there, and if you're wrong, your $2,500 is gone. This trade works a little bit differently. So thanks to a special function built into this $58 trillion asset, our risk tends to be dramatically mitigated, which limits the losses, which makes that 79.7% win rate actually a lot more impressive and ultimately creates a much bigger positive expectancy.
That's right, Nate, which is, been doing this 40 years plus in the market, so I can tell you how critical that element will be for folks going forward with this strategy. And I don't think timing for this briefing could be any better after what we saw. You've seen in the headlines, inflation hits 3%. This is interesting how this news flows. Inflation climbs its highest levels since January. Beef prices soar. Inflation continues to linger at your grocery store. All the negatives that come out. Grocery prices have jumped. Americans are struggling. Prices have been sticky high since late 2021. And here's the truth. They're probably never coming back. With inflation grips a country for years and prices go up, they don't just come back down when inflation slows. Because it's slowing. They might dip back a hair, but prices settle near the new levels even when inflation backs off completely. Hey, like the Big Mac, never came back to 65 cents after it tripled in the 80s.
Right, so 80s was high inflation, it went up, but it didn't come back down.
No, it didn't. Instead, it settled around $1.60 after inflation cooled, and then it continued rising through the 90s. This is a great example. I had one of these other 90s. I was in shock. Unfortunately, that's just how inflation works in the real world. Even when we get past it, prices stay at the new normal, which means Americans still need more cash flow to cover the higher cost of living, even under the best of circumstances. But here's the thing. Most income methods are still dependent on the overall stock market. When the S&P is grinding higher, they perform well. When it's shakier in a bear market, that income dries up. And what good is extra income for tough times when it doesn't actually work in tough times? But this new method doesn't rely on the S&P or the overall stock market. It actually is much bigger than that. Take 2022, for example. Y'all remember that. I was short. Even in the midst of a total meltdown in the broad market from March through June, like on February 24th, our data shows the stability trigger would have fired with a 23.46% accuracy. Look at it, $587 in that kind of market. That's beautiful. And in April, as the slide continued, the study shows another opportunity would have triggered ignoring the chaos in the broad market and pushed us toward a more stable opportunity. Look at that one, 549, 21.95%. If you're not getting excited yet, you're not listening. That was when everybody else was losing their IRAs and their accounts to the tune of about 20%. So while most income methods hit a brick wall and cost up years of gains during the brutal bear market, anchor trades would have continued plug along with a 76% win rate and a positive expectancy throughout the year. That's why I'm so confident what I'm about to show you could give anyone here that wants to take a real shot at extra income through any type of market, no matter what we face in the coming months and years. Because anyone can activate this trade from any brokerage with a matter of a few clicks as soon as our automated system fires off the opportunity. Now, it doesn't matter if you have a large account targeting $10,000 in extra income per trade, or if you started with $500 and looking to skim $100 at a time from this $58 trillion asset. All you need is a brokerage account. You got to have a brokerage account. Can't do this in the dream world. And access the private Anchor Trades Telegram channel. Like in March and April of this year, you could have tried to track all the recession predictions and pulled your money out of the market, risk of global economic recession. Y'all remember this. Reuters poll, economists said trade war makes U.S. recession almost a coin flip. IMF raises U.S. recession risks as tariffs. All that stuff was designed to get you to sell your stocks. Or it could have, you could have ignored all that because while the stock market was anything but stable, there were other opportunities for those that knew where to look. And that's the key, the strategy. Remember, it does not matter if the broad market is stable or not. Anchor trades only fire if our stability metrics are confirmed in an entirely different market. Would have triggered 10 times between March 1st and April 30th, a 21% opportunity on March 5th, a 20% opportunity on March the 7th, a 17% opportunity on March the 14th. A little trend building here, isn't it? Win, win, win. A 17.65% opportunity on March 21st, 22% on March 31st, 23 on April 2nd. Are you getting the drift of this? 20% opportunity on April 7th. I love that 25% one.
And those are the nice ones.
Yeah, that's a real nice one, okay? A 14.94% opportunity on April 17th, a 14.9% opportunity on April 21st. All in all, the study shows we would have gone 8 for 10 in March and April, the same 80% hit rate we expect based on our research in the current market. And even more impressively, while the broad market was down 6% in that span, Anchor Trades would have shown a net return on risk of 82% during those same 8 weeks. Wow.
Yeah, that's pretty crazy. So you just mentioned how tough expenses have been for the average American, 5 years now. We've been saying this since 2021 now, the inflation, the expense. But in the heart of the bear market correction, we're talking March and April, the ugliest months we've seen since, the COVID collapse. Anchor Trades still would have produced an 80% win rate and an 82% net ROI, which means $10,000 in the SPY, you're down $690, right? You're down 6.9%. But in Anchor, on the Anchor Trades, you're up $8,200. That's a pretty big difference. $8,200 or down $690. So massive difference over the exact same time frame. So Tom, can we just kind of slow down and explain, okay, what is actually going on to hand us opportunities that are so different even when that's going on in March and April?
Absolutely. First, let me just say this one more time. This is a brand new way to target income, and I expect it to be the most consistent cash flow strategy we've ever uncovered. I'm not telling you to quit your job or go all in on the next opportunity. What I'm showing you is meant to be a simple way to diversify, to target extra income when the opportunity triggers. In other words, unless you've got a seven-figure account, this isn't meant to replace your income overnight. It's meant to help you target $458, $13.74, or $27.48 from any regular brokerage account, knowing there's bound to be winners and losers along the way. And while I'll never promise any future results, I can tell you we worked incredibly hard to maximize our wins and limit the losses. Let me give you an example. Last December, the anchor trades were on a hot streak according to the data, a 20% win in December the 4th, a 16% win on December the 5th, a 16% win on December the 11th, a 9.89% win on December the 12th, a 23% win on December the 13th. It was looking like the anchor trades couldn't lose. But on December 19th, on a perfect setup, the safety net was breached and the trade turned into a loser. But the beauty of this trade is that we didn't cough up all our gains on previous trades on that one. We lost 16% on that one. Now that ought to give you a little comfort when you're thinking about using this approach. Which means when we add up the 6 December signals from our back test, even include the loss, it still gave us a net gain of $1,406 on a level 2,500 cent stake.
Yeah. So, I mean, I love that example because it shows, kind of like we hinted at earlier, even when things don't go your way, the strategy still has the ability to work. It doesn't blow it up on one. So that's 70% ROI you just said on those numbers over those 6 trades on the risk in 1 month, and that's including the losers. So that's not saying, oh, here's a cherry-picked month where we didn't take any losers. It's saying here's a month where we won 5, lost 1, and we still netted out 70% ROI. And as you hinted, there's a very special reason the risk tends to be far more mitigated than most income strategies, which we'll talk about here in a moment. But Tom, there's something even more impressive about what you just said. During those examples, once again, the market was actually in really bad shape because December was a wrecking ball for a lot of people's portfolios. You guys might remember, we got the Trump win, the election in November, the market ripped up in November, and then gave everything back in December. Everyone thought December was going to carry on the momentum. Market was going to have a huge Santa Claus rally, everything else. Instead, it turned around and people got crushed who doubled down after the November win. So to your point earlier, most income methods are still dependent on the overall market not crashing and burning. I'm not afraid to admit I'm in that camp. I'm mostly bullish. Yet during that stretch, these anchor trades were delivered 6 out of 7 wins, 86% hit rate, and a huge net positive. And that's on those charts that I just showed you with the whole market going backwards and giving up everything. So if I'm understanding you correctly, folks could have completely ignored all that chaos, not even tried to predict the broad market or pay attention to any headlines. And if they had access to the private telegram, they could have followed the exact instructions all month long, which a study would have showed about $3,500 in net income for every 5K, including winners and losers. So how is that even possible?
Well, Nate, that's exactly right, and it's thanks to the discovery we made years ago and have been optimizing ever since. You see, as I keep hinting at, we're not trading the regular market at all. We made this unique discovery inside the $58 trillion U.S. bond market. Now, the bond market itself has a lot of interesting benefits. Some of them we'll get into in a few minutes, but here's the big one most people have no idea about. Actually, before I tell you, let me ask everyone a question. What is the proper price of the S&P 500? What is its true value? Let me know in the chat what you think the answer to that one is.
Yeah, everyone let us know. And then, well, here, I'll answer. So I would say the S&P doesn't have a proper value. It doesn't have a calculated value. I'm curious to see what people say in the chat. I would say just like any asset, it's supply and demand. It's worth whatever people decide it's worth on any given day is what the S&P 500 is worth. I mean, we could see the S&P get bad news.
That's probably the most honest answer I've heard in 40 years of trading. It's worth what it is on the day it swaps hands.
Well, and we know that listen, that we could get good news that we think makes the S&P more valuable, and it could go up, or opposite, it could go down. Just like recently, we got good news and the market ripped and sold off 3%. So I would say there's no true or correct or scientific answer for the value of the S&P.
Nate, you're exactly right, except for one thing. You said that that's true for any asset. And while it's correct for just about every asset on the planet, bonds are uniquely different. Most people are confused by bonds. You see, bond prices aren't just what people feel like they should be.
Yeah.
They have an objective pricing formula that can either be right or wrong relative to the price bonds are trading at in real time. Here's the formula. Everybody got that?
Yeah, everyone write that down.
Write that formula down. Now, we don't have to get into the weeds or what all this means right now. Just understand that bonds are unique in this way. That's why one of the deepest research papers ever constructed from the 2014 Journal of Financial Markets makes a stunning conclusion. Empirical evidence strongly suggests that corporate bond market returns are predictable. There is evidence of return predictability for both investment grade and high yield bonds. These results are robust to alternative model specifications, return measures, and exclusion of extreme observations. And by the way, AI agrees. Here comes artificial intelligence.
Yeah, it says right there.
Prices are more predictable than stocks.
Yeah, interesting.
Now, we have known this fact for years, but we didn't have a real way to capitalize on it until recently. You see, a few months ago, we ran our study on our Genesis bars, and he was looking at which assets were most stable under certain conditions for the purposes of generating income from those assets. That's when the data revealed something that shouldn't have shocked us, but it did. Under identical conditions, looking for stability, the SPY delivered a 51.22% win rate. QQQ delivered a 48.78% win rate. The IWM delivered a 47.37 win rate. Gold delivered a 52.94% win rate. USO oil delivered a 56% win rate. Now TLT delivered an 80.77 win rate. Remember, that was the moment we realized we could skim cash flow with the built-in advantage of this $58 trillion mega asset.
Yeah, well, let me jump in here because those numbers actually are stunning. For anyone, if you guys in here, if you've done a lot of testing like I have, I do testing all the time, you don't just see massive leaps in performance like that from the very same conditions. And what's really interesting about your data is you can tell it's actually not a fluke. For example, you guys can probably follow this. The assets we know are traditionally less stable, like small caps, IWM or the NASDAQ, well, they were also less stable. They were the lower win rates. The S&P was in the middle, kind of middle stability. Gold, more stable, did a little bit better. And then there's TLT at the top of the list, which represents the $58 trillion bond market, just absolutely blowing everything else out of the water by a huge margin up. So you said we shouldn't be shocked, but I have done enough data analyzation to be completely shocked that one asset under the exact same conditions could be that much more profitable.
You nailed it. It's not a fluke at all. In fact, after Jonathan presented those 80% accuracy findings, we had him dive deeper and cover nearly 10x the time span under these same conditions. And the results for TLT barely budged, going from 80.7% to 80.3%, even as the data set completely changed. That proved beyond any doubt there was some real magic in this particular ticker for this trading opportunity. And as you know, Nate, from there we have been automating this brand new opportunity so traders can take full advantage of it.
All right, so we now realize that most people have no clue how unique bonds are compared to the regular assets we trade. Completely lost on people. I will admit, lost on me as well. Never even considered trading bonds differently. And now you've shown us that using bond stability to your advantage creates one of the biggest outsized advantages that I've ever seen. But what is actually happening? So we know, okay, 80% versus 52, it's stable, it's 58 trillion, but what are we actually doing? Are we holding TLT and collecting a 4% dividend at the right times? Like what is actually going on?
No, not at all. You see, well, most of the $58 trillion in the bond market is doing just that, using it as a safe haven to collect 3 or 4% a year. we're not interested in that at all. What we're doing is using that stability to place a special type trade that has the power to pay out nearly 5x the annual amount that TLT pays. That got your attention, didn't it? In one day.
Yeah.
Let me show you what I mean. On November 11th, we got a full go on TLT as it met our stabilization requirement. Said it was bullish, which means it's going up. And then the trade is entered, okay? And you do the trade, and large enough income threshold at 25% to validate the trade. When these factors align, it means we have an official anchor trade which triggered at 12:30 p.m. Now, the automated system fires off the exact trade details in the private Telegram channel with a step-by-step instruction. And from there, we just wait for the TLT to remain relatively stable to collect that juicy income in under 48 hours. As you can see here, this is one pretty stress-free way to take money and grow it, as TMT remained great.
Yeah. So let me jump in one more time here. Probably not one more time, probably a few more times to be honest, but 2.5K on that one. You're making $625 in under 48 hours. Again, you showed us what, like 8 or 9 so far under 48 hours. And once again, didn't seem to care what was going on in the broad market. What didn't matter for that trigger at all. It's just a matter of what happens with that particular asset in those particular conditions.
Yeah, not at all. And it's really the beauty of this brand new opportunity. I'm not trying to predict anything. We're playing the numbers. All I care about is tapping into the specific market when the stable conditions are confirmed and skimming along some income off the top when these trades work out. Remember, there's about $58 trillion in this bond market, and as long as this uniquely massive market doesn't go off the rails during our trade, we should collect a nice payday within a day or two. Not a long time hold, within a day or two. And take the September 16th trade where we picked up $476. It stayed in the green area. We'll call it the green room. I like that. Anchor income achieved right there for everybody to see, $476. This already got your attention. As long as it doesn't go off the rails, we expect to claim our income. You see how wide that is? It gives you a wide range for you to end up profitable. And all we're doing here is using a special type trade that this asset supercharges. You see, when most people think of options, they instantly think direction, usually buying a call or put, the way I think about it. But in an income trade, it doesn't work that way. Instead of buying a call and needing the price to go up a certain amount to make money, an income style trade uses a simple spread to create a profit zone. And as long as the option expires above that level, the trade pays out a profit. And if the price finishes below that level, it turns into a losing trade. So you probably can already see why a stable asset is ideal for this style trade, right? If it's stable, it's going to stay in the green room. The less likely it is to torpedo below the profit zone. Thus, the more wins you're likely going to have. And Nate, that was the massive breakthrough on TLT. We ran the numbers using our proprietary trigger. TLT was dramatically more stable.
Well, Tom, it does make perfect sense. I mean, just look at that September 16th trade you showed us. Your TLT position barely budged. You guys see how much room there is and how little those candles moved relative to that range. It never even got close, about as stress-free as it gets. But here's the crazy part. If you took that same position on September 16th, but on the SPY, it looked quite a bit different. Here's the SPY, okay, same day that trade triggered for you on TLT. You could set up the same kind of income trade, right? You got a nice big fat zone on there on the SPY. Plenty of room to stay in the green room. I'll use your terms. Plenty of room to stay in the green room there. But while TLT remained totally stable and delivered an easy win over the next 48 hours, SPY didn't look so good. Not so stable on SPY over the same 48 hours. So we're talking about the same type of trade in the same conditions at the same time, but one is a massive loser and the other is a stress-free winner that never even got close. And that's a huge difference.
That's the beautiful thing about it.
Yeah, well, it's a huge difference. I mean, especially if you go over the data over the long term, like your win rates were showing.
Right.
But the stability is really only half the trick based on the notes we have from you and Jonathan. Is that right?
That's correct. Exactly right. Part of the reason TLT is so effective is a kind of a silly advantage I've never even considered before. Believe it or not, the underlying price of TLT being so low relative to massive size plays a key role in why this trade is so effective? Let me explain. Remember, the bond market itself is about $58 trillion. The TLT reflects the bond market's 20-year pricing, like how gold reflects gold's price. GLD reflects that. But TLT is priced under $100 per share, which means if the bond market loses $250 billion in value, has a real bad day, it's equivalent to TLT dropping only 36 pennies. Follow that math. And this helps our income trades because it makes TLT even more stable in practice. For example, just recently on Monday, November 10th, the market had a major rally with news that the government shutdown should be ending. Y'all remember that, right? The chart below with the SPX showing the reversal and huge jump in the S&P 500 on the news. If we zoom in, we can see how the S&P actually worked out. It closed at 67.28 on that Friday, and it closed at 68.32 on Monday, which means it moved $104 in just one trading day. Now, before we dive a little bit deeper into why that's so important, let's compare it to TLT on the same day. TLT closed at 89.57 on Friday, 89.55 on Monday. The 2-cent movement on TLT compared to the $104 movement on SPX is a lot more like a Cadillac trade than it is a race car trade. Now, of course, that's a pretty extreme example, but it's meant to show how different the TLT can operate compared to the rest of the market.
All right, so let me jump in because this is the math stuff I love. This is where I got convinced when we actually went through the math on this. And it goes right back to your explanation of that income style trade that we just talked about. So you're not saying the bond market doesn't move. In fact, we've seen it trend nicely over the last year. We're not saying it doesn't move. What you are saying is that the bonds have a distinct and unique advantage because of this TLT trifecta. Number one, it is massive and hard to move. So it might move 36 pennies when the SPX moves $100. It's one asset class that's much bigger than the entirety of the stock market. So it takes a lot to move $58 trillion and kind of push it off the rails during your trade. That's why even in an apples-to-apples comparison, TLT moves about 40% less than the S&P 500 on a day-to-day basis. So even if you shrink it down and go by percentages, it still moves a lot less. Number two, its underlying price increases the advantage. Not only does TLT move less on relative terms, like as a percentage, but it moves way, way less in real dollars because of what you just said. The price is really low, so it moves very, very little. And then number three, it's more predictable and stable. Top-level research shows the bond market is more mechanically predictable, and then your own research shows it's way more stable under the exact same conditions as these other assets. So those are the three I think we have. Is that all right?
Yep, that's right, Nate. Let me walk you through why that trifecta is so incredibly powerful. Remember, income trade uses a simple spread to create a profit zone on the chart. And that's that green room I'm talking about. Anything above that zone equals profit. Everybody understand that, right? In the green zone, you've got profit. In the red zone, you got loss. But we're not just taking a coin flip trade looking for it to make a move to our side of that profit zone. We only take a position when our proprietary signal fires on TLT, which means the price is already well into the profit zone. So we need the TLT to make a move in our favor to win the trade. We don't need that. It's already in the winning position with time going by, plenty of room to spare. We simply need the $58 trillion market not to go off the rails in order to collect our premium. And as long as the price stays anchored to its expected value within reason, we're looking good, which is our data shows happen about 80% of the time when the signal fires.
Yeah, I think it makes so much sense. When the asset is already in position to profit, that trifecta means, hey, it's really stable. It's very unlikely that it's going to break you when it's already in that position. You're not talking about giving it weeks or months to make a move. You're talking about less than 48 hours. So again, you're just kind of stacking up all these advantages. It's stable. You're already in position. It's already there. Your trigger hits, and you're not giving it a lot of time to move away. So you're not kidding when you say it has to go off the rails in no time flat to create a losing scenario. And so I got to admit, as an income guy in my own right, I really love what you've done here. I think this is one of the coolest trades that we found because it is so different and unique from other income techniques.
Well, Nate, we've been hard at work trying to find these unique opportunities. When this one came on the scene, it that people can execute within a ton of confidence for all the reasons we're talking about. Confidence is important in trading, but I'm glad you brought up what it takes to cause a loss, because that is where things get even better on anchor trades. You see, most trading strategies or income methods I know of have one really major flaw. They do a great job picking up winners with a high hit rate, but when they do eventually take a loser, right, the losses could wipe out all your gains. That's happened to me many times. There's nothing more frustrating than that. I am sure all of you have been there and you know exactly what I'm talking about. But part of the secret sauce of the anchor trade is the following. We should never take 100% loser.
Yeah.
As a matter of fact, this is the biggest advantage of the underlying price of TLT. And most people have never been trained on this. Let's go back to our chart one more time. I want you to see this picture. That yellow line represents the point which a trade flips from being a winner to a loser. Everybody see that? Give me a yes. Everybody see that? Where it goes from green to red. In reality, that's not quite true, but that line is actually a range of two options we're trading. It could be 50 cents wide or $1 wide or even $5 wide. Now, most people don't really care about the range because it's very narrow relative to price, meaning that the price can easily cross from one side of the line to the other side, like you see here. For example, the SPX is priced around $6,800 and uses $5 wide spread, so the range is about 0.07% wide. That means a typical 1 minute candle will cross back and forth through the entire range with no problem. Winner, loser, wears you out, doesn't it? So on the SPX, it acts like a clean line. But TLT is different. Our trades are $1 wide, which is a move of over 1%, a massive move for TLT. And that's absolutely critical, because it means that our trades don't go from the profit zone here to out of the profit zone here. That's how most income strategies work. On one side of the line, you win, the other side, you lose every penny. But our trade takes advantage of range by giving a trade a lot more room where it can roam. It still has value. And this is part of the secret sauce that makes this whole system so much more profitable. Because it means on the rare occasions when it doesn't work out, which does happen, we're not wiping out the entire account. Instead, that's a manageable setback. Look at this. Look at this. This is unbelievable when you just sit back and look at the difference of keeping the risk. I always tell people to worry about the risk. The wins add up a lot faster.
Yep.
And to make it easy where you don't have to manage that range I just described, I'll give you a clear stop loss rule on every trade, right from the beginning, before you even make the trade. As I've showed you, the entire bond market has to make a pretty huge move to put us in the danger of hitting our stop loss.
Yeah, so I absolutely love this. Me and Kane were talking about it too last week, and I definitely agree. Most people will never learn about how that range works. I've listened to 100 presentations. No one has ever explained how to use the actual range. And you guys can let us know in the chat if you agree. I've never heard someone say, well, then we have this middle zone that can also be used to our advantage. Now, of course, there's a good reason for that. For most strategies, it doesn't even tend to matter a whole lot. But the way TLT is priced, wow, I mean, you can literally see that completely changes the game. You have an entire 1% extra cushion there where the trade has still value baked in. So I'm sure a lot of folks in this room are newer to options. They're not even sure why that matters so much. This might be pretty new to them. They may not even understand what we mean when we talk about a 50-cent wide or $1 wide. That might be new. But the beauty of Tom's system is that you don't have to understand all the nuance of how the options work. It spits out these dynamic trades in real time with the exact instructions to follow, so you don't have to figure out what range or anything else. All you really need to know is this pricing loophole can help not just keep the win rate high, about 80%, but also keep the losses small. Guys, if you can keep the win rate high and the losses small, you're going to be onto something, which is probably even more critical over time than the win rate. So, Tom, now that we've seen the power of anchor trades, let's get down to brass tacks. How do we get our hands on the very next opportunity?
Well, the only place to get the real-time income alerts is through the private Anchor Trades Telegram channel. Until now, the only members in that channel are my medallion traders who are paid north of $25,000 to be medallion to access all of my behind the scenes type work, and I've considered keeping anchor trades available only to my most exclusive members. But after analyzing all the data and completing all the research, our team concluded this is a trade that everyone here tonight should have access to. Even if you got buried losses from years ago, you ought to be thinking, I finally see a trade that I can do and not blow my account up. Let me tell you why. Anchor trades are designed to work in all different type of market conditions. We have those. Anchor trades have been incredibly consistent with a historic accuracy rate of nearly 80%. Anchor trades keep losses mitigated so you don't wipe out all your gains with one trade that doesn't go your way. Anchor trades are extremely easy to follow, even if you're new to options, even for beginners. Anchor trades are small account friendly with the average trade cost around $82 per trade. That's why today you can become a member of the founding family. I'm going to call it founding family of Anchor Trades Income Alerts. This is the only service I know that's completely dedicated to take advantage of this unique income opportunity in the bond market. And after going through nearly 5 years of data, which takes into account the bull markets, the bear markets, up and downs, high inflation, low inflation, and every political change you can imagine, the final study shows small account friendly, 82 per average position size, $458 average one-day income based on a $2,500 investment, and 80.3% success rate with built-in risk mitigation. And the best part is we made all the alerts incredibly easy to follow. Nothing hard about this. If you can read a basic sentence, you can do this trade. We made the alerts incredibly simple to read, automated it, Anchor Trade private Telegram channel. Our custom algorithm scans TLT 24/7 looking for anchor trades. It's pulling in a whole lot of data, including defining the proper net asset value, along with our proprietary reference levels. Every day at 12:05 Eastern Time, the algorithm pushes an update into the Anchor Trade channel. We call this a heads up because it lets you know where we stand if the trade is imminent. You can see some of the data we're scanning here, like the low threshold. That's the price that TLT would have to break below for a bearish anchor trade to trigger, and the high threshold. Look at the difference, very small difference on that, less than $1. And that's the price TLT would have to move. And it shows you what the current bias is and even the expected options trade will take if it's triggered. And my favorite here, it tells you exactly how the trade is to trigger in the next hour or so you can prepare. You're not sitting there staring at a screen. And when you get a trade, it's even simpler. The algorithm automatically posts into the Telegram in real time with exact trade details. It includes the option strikes, the expiration, the current price, your ROI potential, etc., everything you need about a trade automatically. You can follow this step-by-step trade instruction and set up your own anchor income strategy. And remember, every time one of these alerts fire, it's the same criteria. Our study shows would have hit with an incredible 80% accuracy.
Yeah, so the Telegram makes it really easy to follow. That's what I've followed the last couple of days, and that heads up where you kind of know what to expect. Hey, here's what we're looking at. It's likely or it's unlikely. And then you mentioned you expect this to be the highest performing income trade in your arsenal. I mean, that 80% win rate. So until now,
you said, Nate, let me just interrupt you. What you said, and the difference this trade is the risk side of the equation.
Yeah.
The risk side is so small relative to other income trades.
Yeah. Well, like you said, until now, only the medallion members have been allowed in that Telegram channel. So I think we're braced for impact, as they say, on what the cost for Anchor Trades Alert is going to be.
No bracing required. I'm sure I can make Anchor Trades a full premium service that costs approximately $3,000 a year to be included. It's worth it, especially when we account for the tens of thousands of dollars we spend on data to power the automation. The $57.98 is the monthly bill for just one of our data feeds, right there. All the computer such there, or a total of $70,000 per year. But don't worry, we're not going to pass that $69,576 annual bill to you. Today, we've shown you over again how these anchor trades have shown the power to pay $460 in less than 48 hours. Obviously, I can't predict the future, and I can't guarantee our next opportunity will be a winner, as we've said in a dozen times. This is the long run play. Our historic study shows that as long as the $58 trillion bond market doesn't go off the rails, we should expect that $460 to hit our account within 48 hours. So I'm going to open up Anchor Trade's founding memberships right now. Get ready, folks, for just $460 per year. That can't be right. $460 per year. And my hope is our first alert gives you the chance to pay off the whole year, put you in scholarship form for the next 100 trades you do. Now, let me be clear. I don't know how long that price will last. I'm not guaranteeing a certain amount of spots. It's first come, first serve that wants it. So if you want to make sure you don't miss your chance to get in one of those family spots, do it tonight. Grab this ridiculously low founding membership, and we'll open up access. I have one special bonus you should know about. Inside the members area, in a report simply titled the 30X TLT trade. Now, 30X means what? It means 30 times your risk. It's a longer-term trade on TLT that costs about $15 per contract and pays over 30X reward. Now, of course, it's a low probability moonshot trade, but I think the conditions exist that make it achievable. And here's the deal. Just one tiny contract at a cost of $15 would pay for your entire membership if it hit. It would turn about $485 in profit on the moonshot trade. And that's what I'm hoping for with this outsized trade opportunity. And just to make sure you have the spare cash to make that bonus trade if you want to, I'll give you an instant $15 rebate off the Anchor Trade Alerts membership. So you can join tonight, $445 for the entire week. Not kidding, for the entire year.
For an entire week. I love that.
Claim the founding membership right now, dtitrader.com/anchor, or you can call our team at 904-706-3532 if you have further questions. And as soon as you lock in your membership, you can log into our one-click trading portal, and you will see how to join the Anchor Trades Telegram in just a few clicks. Very simple, not hard to do. I can follow it. And from there, you get every alert in real time, right to your phone or computer. Now, don't worry if you've not used Telegram before. It's very easy to use. We even have a short guide in the members area to walk you through step by step how to get on Telegram if you don't already have it on your phone or computer already. Now, if you paid attention tonight, you know that this isn't just another trade setup. It's a special one. Anchor Trades have shown the power to work so well because of unique advantages built into this strategy. I'm sure we keep those secrets behind closed doors and charge another $9.97 for access to the strategy itself. But of course, founding members will get all the details inside the Anchor Trade Strategy Guide. This is a step-by-step guide that reveals all of our proprietary rules and guidelines. And it's included for free inside your Anchor Trade sign-up for founding membership. And if you're new to options, we have you completely covered. Inside your members area, you can find a step-by-step video on how to place these income trades. And if you want to dive a little bit deeper into the bond market so you have an even better understanding how Anchor Trades operate, we're also going to include Jeff's 297 bond class for you at zero cost for members.
Well, Tom, it looks like you have definitely loaded everything up possible. I mean, it does look like a $3,000 membership, as you mentioned, the alerts, the strategy, the training, all the stuff in there for $445. We should have done the monthly deal. That's what we should have said. Do it for 30 days, see if we hit a few winners, and then have everyone upgrade. But I guess we'll do it for a year, and then
tonight we'll do it for a year. We're going to talk about that, Nate, because this is so valuable. We'll do it tonight for that price. That's what we said.
Yeah. Well, there you go. Well, I can't wait for the next one. I'm 3 for 3, by the way, Tom, on these from firing in the Telegram. So yeah, I'm ready for the next one.
I did 2 for 2, and I said to myself, and I started looking for it. I looked at my watch. I said, I got to go check that trade out, and I did, and there it was. I did it again, and I couldn't believe the price. I actually got in on the last one at 61 cents.
Yeah. Well, remember, you guys don't have to be a 25K medallion member anymore to get access. Founding membership is insane discount, $445. That price is correct, with the goal that the very next signal hopefully pays off your entire year. And it'd be pretty nice to have the whole year paid off in 48 hours, like the research showed happened on September 3rd or July 11th, or this one on June. I mean, look how safe most of these trades are. It doesn't mean that all are going to be like this, but look at May 7th. It never even got close to that. I mean, here's February 5th. You got a little bit of lower movement. Look how how easily that one fished. I mean, over and over and over again, these trades are so solid. Plus, Tom's giving you the 30x TLT trade report. By the way, I'm in this trade as well. I've got a whole bunch of contracts of this 30x trade. So, Tom, fingers crossed we get that.
Absolutely.
I think 2026 could be a heck of a year for
I do too.
for TLT. So I think this trade could really cook as a bonus. $15 if we hit it. Hey, that'll pay for the membership. So hopefully you pay for the membership on Monday or Tuesday if we get a trade. But hopefully you also pay for it with the $15 trade on the 30x. Plus you get the strategy report, you get the other bonuses, you get the Jeff bond class. So I mean, hey, we waited until November, but we really got the no-brainer of 2025 done for you guys here at just $445. So if you haven't grabbed your spot yet, do it now. It's ridiculous. It's the most obvious no-brainer we've probably ever done. This, by the way, Tom mentioned that data feed that powers the algorithm. That's just one of the data feeds. That 69 grand is just one of the data feeds that we have hooked into here. The overall cost, I mean, me and Graham have run through them before. There's several $100,000 of data just to do the testing and then the real-time commercial data feeds to put these out. So you're getting access to something that has 6 figures worth of development back end into for $445. It's a pretty good deal. So take advantage of that. One of the big questions we got is how often will it trigger? Tom, I know you're going to teach them how to get some bonus trades out of that. I don't want to spoil that for them, but I noticed on the test it was about 5 times a month was the average. So one a week or so. Typically, you could take some bonus once you learn a little bit more. And Tom, I know you kind of twisted around with some of those bonus trades over the last week. So I'm not sure if you're planning on teaching people that or if that's just for you, but they could get some bonus trades.
Yeah, absolutely. Everybody knows that we're going to make sure we work at it together, but I'm really excited about this, folks. And I think that the numbers speak for themselves. If you're here to learn, you're here to have something in your account that diversifies the standard up and down of the S&P, this is your trade, because what it's going to do, people always ask me all the time, Tom, I'm worried about the market. Here's something that you can do to diversify your account and have it working for you when it fires. It's easy to read. That's what I like about it. It's so clear. It's simple. It tells you, here's the option you're going to buy, the time you're going to buy it. You got all day to buy it. You don't have to buy it once it figures. You just get in at the price, and you put it on the day of when it triggers. You got all day. So it's not like you got to call an ambulance to get you to your broker. You know, it's right there for you. Okay.
Yeah.
And
well, that's one of the benefits of how slow it moves, actually, because it is a slow mover. So I got in a couple late. Actually, one of them I got in the next morning that I missed. It was about a penny different. I got in the next morning, and it was still. These examples are all based on $2,500, Lisa. So average trade is going to be in that 18 to 19% ROI, which keep in mind, I think people should understand this.
Another thing that was amazing to me, it's sort of like if you look at the trade when it sets up, you're buying it at such a discount to the real value of it. And so the only thing that you need is to stay in the green room and the time to click off. And one thing we know about time, right, folks? It keeps moving. So that time is working for you now instead of against you with options. You got to love that part.
Well, I think the 18% average win is really juicy. We're talking about an asset that's very boring, to be honest. It doesn't move a whole lot. And we're talking about one-day trades. So a lot of people think, 18%, that's pretty good. And they're thinking like a 2-week, like an income machine try, like I would do. We're talking guys like one day, flipping around and making 18% in one day on that asset. I think that's really, really attractive, especially then if you factor in the part that you're not taking a full loss when you're wrong. And so like this, if I have to pick my favorite thing in the whole presentation, Tom, it's got to be this, right? I mean, you looking at this and how those wins can stack up when you have mitigated losses makes all the difference in the world to a real trader. And I'm sure you guys have experienced exactly what I'm talking about, because I trade a lot of income, and a lot of times when I lose a full 100%, right? I risk $1,000, I make 200. I risk 1,000, I make 250. I risk 1,000, I make 210. But then I risk 1,000, I lose 1,000. So that difference in what you're losing really makes a big difference. So I think that part.
I love the risk mitigation. In fact, because of the risk mitigation, it allows you to trade, based on a level number. After you get confident with it, you can take that up, and once you get, you'll go through about 10 of these trades and say, hey, maybe I want to increase that allocation because this does work the way it was said it worked over enough trades. You know, the numbers work for you, make it work for you. I just want everybody here that, you know, that goes through the heartburn like we had last week, to have, you know, be able to sit there. If it happens again with that heartburn, you look over your anchor trade and it hadn't moved, you go, boy, that's a good trade. You know, that's what you're going to say. I guarantee that's what you're going to say as a trader. Oh, that's a good one. Okay.
Tom, this is awesome. I had some, you know, some kind of little previews of what this was going to be tonight, but this is even better than what I knew about, what I thought was coming down the pipeline here. So congratulations on this. This is so cool. And the fact that it's just fully automated and everything. Also, with everything I know that was put into developing this, I don't know how you convinced Nathan to put the price so low, but folks, if you're at all interested in this program, I would grab it at this price, 1,000%. And somebody asked about what about VIP lifetime. So on the second page, folks, if you take the 445 offer online, on the second page,
Yeah, the anchor trade is pretty good. Remember, if you do sign up, watch the master class that I did. After trading the thing, I said we could do this trade 3 times a week, just knowing the following thing, and I covered it in a video after we did the anchor. So you definitely want to watch that. So y'all ready to learn something that I've probably never taught before in my whole career? Wait for y'all to give me a yes. Everybody give me a yes if you're ready to learn something I've never taught in my entire career. I'm letting everybody sign in, okay? So first, let's talk about zero dated options. Zero dated options, okay? Does everybody know what zero dated options are? Okay. So the first thing we want to do, let's just blow up a chart and go through one chart of several different tickers that have options expiring today. Now, you got a lot of stocks have options expiring today, but it's hard to do it with stocks. Probably better off doing indexes, okay? But let's go look at, let's start out with the diamond, okay? Put the diamond in there, okay? So if you take the diamond and you take the price of the diamond, where's it at, Jonathan? I'm trying to see it, 95. Hard to see it.
495 and a half.
Okay, 495 and a half. If you take that price and just using a diamond, for example, where did diamond open today?
Right at 495.
Okay, so now let's just think about this, okay? Because this is going to be a pretty interesting thing to do, okay? Okay, so look at the opening price 94. You said open 90, 95. So say if you sold the 95 put and bought the 94 put, you do that for $1. Huh? Everybody got that?
If we sold the 95 put,
Yeah, because RB3 is positive and Genesis was positive, wasn't it? You got RB3 positive, Genesis positive, right?
yeah, RB3 was positive. There's Genesis right there. You're looking
Okay.
at today's you're talking through an example from today's expiration.
Yeah, you still take I'll take the day it's current. Okay.
Okay.
So let's say that you said to yourself there at 12:30 that the market, the diamond should stay above that price. Let me give you the price. Should have stayed above 495. Everybody see that? The diamond should stay above 495. And whatever you sell that option for could be the money they paid you. Everybody understand? But if it goes below 95, you're going to lose money, correct? Everybody got that? Okay. So if we sold it, Jonathan, go and we'll set it up, but I'm not, right now, it's not a sell because do you see it below RB4? Everybody see it below RB4? Everybody see that? But let's say that you did sell it. You did sell it. Jonathan, what would you get for a 95.94? Can you do options on the simulated account? Because it'd be great if you show how this works.
Let's see. Yeah, I've got a sim account open on, I think for swim. Let's do that.
Okay. So if you sell it, what will they pay you?
Let's
So-
go see Diamond, Feb 13th, 495, 494. Looks like about 20 cents or so. 21 cents marked.
Okay, so they'll pay you 21 cents. So why don't you sell me 100, just simulate it. Sell 100. Let's have some fun here with the simulated money. I never used simulated money, but let's just say we did. And everybody understands we were triggered because we went higher after Genesis. Everybody understand that, right? We wouldn't do this trade now because it's negative after RB4. But let's say you did it. Okay, thinking market's been coming up all day, the trend's in force, been going higher, right? Everybody understand, been here before, right? Okay, we sold it for, what'd you sell it for, Johnson?
Waiting for the sim thing to fill it at 20 cents.
20 cents. Let's do the math on it. So they would pay us $2,000 if it stays above 95, correct? Everybody got that? Give me a yes if you understand that. We get to keep all the money, $2,000, right? And to put it, if you did 100 of them, you got 20 cents, you had to put up $8,000 to make that 2,000 margin. Everybody got that? Okay, now, Jonathan, go buy one lot of the 94.95 call.
One lot of 94.95. I go one lot for, looks like it's currently marked at 85 cents.
Where's it at?
Yeah, they had it marked at 85 cents.
Set at 85.
Okay.
Now understand, we made the trade after Genesis when all the signals said we're going higher. Everybody understand that? Say yes, you understand that. And use today's opening price. Everybody following through? Okay. All right, so we're short the 95.94. We're trying to make 2,000, right? Okay. And we paid, how much we pay for this? 85 cents?
Assumption 85 cents, right?
Okay, set an order to sell it at 95 cents up top and set an order to buy the other one back at a nickel.
Okay.
Where we can go to monitor and watch the two prices.
Actually, I don't think this platform is filled either one right now. Let's see. 85 debit is currently at 82, so I don't know why it's not filling. But such as life on the sim side, the 20-cent credit is currently 17, 18 cents. So that's not filling yet either.
Well, that's go and change it to 17 cents to have a live order. And raise the price on the other one get filled. Because I wanted to. So here's the setup. You're long a call 94 to 95. Where is it going to end up if we stay above 95 cents? I mean, 95 on things. You end up at $1, correct? Everybody got that? It's going to go to $1 if we stay above 95. 94 to 95, $1 whip. You bought it. No matter what you pay for it, it's going to be at $1 or higher if you go above, correct? Does everybody understand that concept? So here's the setup. You sold this other one for 20 cents, right? And you bought this one for 85 cents. So in the best of all worlds, this goes to $1. And your other one will expire worthless, right? And you get to keep all the 2,000. Tell me everybody understands that concept. I've never showed this or taught this before. Does everybody understand what I'm saying? You got one, which is that call at 85 cents, and the other one you sold for 20 cents, okay? And repeat what I just said. Nothing. No, it's not an iron condor. We're long a call 94 to 95. The maximum profit we can make is $1. You got to understand that about options. If you don't understand that, get that option playbook. The spread difference is $1, right? The spread difference is $1. Okay? The put that we sold for 20 cents, we just want it to expire worthless. We got 100 of those, and we only got one of these. We did because the one is our guardian, so to speak, to tell us to stay with the trade or get out and take and exit. Does everybody understand what I'm saying?
The in-the-money call options do a better job of reflecting kind of a true valuation, is what you're saying, Tom, right?
Yep, exactly. So, if you got 100 of them versus one, would you make more money with 100 than you would with one? Right? So, if you watch the price of the call option, where's it at now, Jonathan? The call option.
Look to be marked at around 81 cents.
Yeah. So we only got an hour to go. Where's the diamond at right now? If we close right now, we get to keep the whole $2,000, wouldn't we?
The diamond is at 495.91.
We got 91 cents in our favor, don't we?
We do.
And the call option is at 80, right? What is it, 82?
82, yeah.
So now let's go look at a chart on the diamond. Under ordinary circumstances, looking at that chart, you got a lower low, lower high, you got an hour to go. It looks to me like the diamond is crumbling. Does it look that way to you? That the diamond's coming down, they're going to take my 2,000 could turn into an $8,000 loss, right? So you're going to say to yourself, I'm getting out, correct? When you see that, correct? Looking at that chart, that's what you probably say. I've done it I've probably done that 10,000 times. hit the door and leave it alone, right? But let's go back now to the call option.
It's marked at 79.5. 79.
So the market's coming down, isn't it? So here's the number I would use. If it goes to 74, that call option goes to 74, I'd exit this trade. If you use this technique, it allows you to override everything and just do it by numbers. No emotions, no chart reading, it's just numbers. You will do a lot better on this trade. In fact, Jonathan, our next 5 days in live trading, we're going to do this for the fun of it and do it in real time with the real market. How's that sound on my live traders that come at 1:30? You like this? You like this to see it live for 5 days? It's going to teach you so much that you're going to say, whoa. Now let's go back. Jonathan, call it out if it goes to 74 for me.
That's 76.5.
2 cents away.
76. 76.5. 75.5. 76. 74.5. 76.
What we want to see is it quit coming down and start going up.
76.5.
This is called tape reading, Kerry. I was sitting here during the presentation anchor and I had this trade on. I said, I don't want to get tied up because I could lose a bunch of money. I could lose $8,000 with this trade, right? And I was trying to think, is there anything in my 40-year career that would help me put the emotions aside? I only got an hour to go, right? And I said, I got it. I'll take the opposite and buy a call and use that number. Where's that call right now?
78.5.
Y'all get the drift? I hit 74, I'm out the door with a real trade. Where is the option at right now? 19 cents. I'd rather pay 19 cents and scratch a trade that's turning south than hang in there because I think it's going to turn and lose 30 or 40 cents. You see the value of what I'm teaching you? Is that cool or what? Where's it at now, Jonathan? 79, 80. Is this going to help you if you do it with me next week in live trading 5 different times? I think it's going to help you make a bunch of money. I got it. And the light bulb went off after 40 years because everybody fights the emotions, right? Look at that chart. That chart tells me, and you're thinking, oh man, I don't want to lose $8,000. I don't mind losing 50 or 60 cents or $100, but goodness gracious. This is something that we'll do next week in live trading. Let's talk about live trading and wrap it up.
Tom, you've been on a bit of a hot streak in 2026, live trading 18 out of the last 20 trades this year, or 18 of the 20 closed trades, more accurately stated. You've booked a profit. Here they are listed all on the slide if you want to take a moment to just glance through them all.
Well, let me ask you a question, okay? This is what we've done in real time between 1:30 and 2:30 every day, or Tuesday through Friday, right?
Right. That's Tuesday through Friday at 1:30. Live trade with T-Buzz.
And we originally charged over $1,000 for this program, but we got rest of February, and we got the start of all of March, and we end the program, we get to the point, right? That's what happened.
Yeah, end of March. So that's it's Feb
End of
13th.
March is when the program's up.
A little bit more than a month and a half.
I'd say we know what we're doing with that kind of track record. This up to daisy market, don't you? So if you want to join live trading, it happens every day at 1:30. We record it. Jonathan, what if they can't make it? Can they get notified that we're doing a trade? Because we do one just about every day.
Yeah, we've got a Telegram channel that I post Tom's trade into every single day, or if there's an update, I'll post that into Telegram too. Sure thing.
Y'all notice that option on that other one's at 30 cents now, and the options drop below 74. Look at the difference. Goodness gracious. I taught you something today. If you practice with me next week, it'd be worth a lot more than $399, right, Jonathan?
All about tape reading. Best process you got.
Jonathan, I think next week's going to be fun. Tuesday through Friday, we'll be doing this exercise real time.
Yeah, I look forward to that always, Gotta enjoy learning new things when it comes to the market. So look forward to learning something new next week. Market's always changing. You gotta keep learning.
Yeah, that once that option, that call went below 75 cents or 74, that option that we were looking at selling at 20 cents is now at 35 cents. To give you an idea about what I taught you, how valuable it was. Pretty cool, huh? Any questions? John asked, how do I know where to get out? John, I've been trading numbers for 40 years, and I know the numbers around a $0.50 and $1 spread. Typically, when they go above 85 cents, that means they're going to close above that. That's 85 is a good number. But if they break back below 74, you ought to get out of that long call. And I'm talking about these same days, That's all I'm talking about. I'm just trying to show you different ways. And I do that in the live trading. I think people have learned so much being with me. Go back to that track record. Yeah, it's live. I'm live right now. No, Philip, it's not an iron butterfly. It's short a put that I was, a 95 put, 94 put credit spread, and I bought the one lot just to have something to judge. Well, how accurate was it? Could you use it other way? Yeah. What if you just bought a put? Let's just go look. We can go back and we'll come back to this. That's a heck of a track record. Let's keep it going. Okay. 30 days. We've got about 35, 40 days left, right? That's pretty strong. This market, that's off the charts. RB4 is a very lucrative bar. In fact, I probably would say that and RB3 and Genesis, those three are just really powerful bars. Give me a yes if you understand what I taught you was worth a lot more than 399 bucks. Especially since I'm going to trade live for the next 35 days with you. Give me a yes. Did I make my point? That's something I've never taught before. Way to go. Way to go. All right, Jonathan, let's deviate back to a live market and see what it's saying now. Okay, RB4, notice, see, we were fat, dumb, and happy after Genesis. See that? And we even went higher. That option, by the way, if you'd have sold it after Genesis, you could have bought that option, the 95-94 spread back for 7 cents. Sold it for 25, got out at 7 on that trade. But if you stayed with the trade, you said, hey, I'm gonna get all the money. RB4 turned south and the trade went from 7 cents, you saw it at 20, up to 35 cents. Kerry says, like every program that I have, I teach you how to get the uneducated pay for your course. And I think we've done good doing that, Jonathan, when I look at what we've done. Anyway, I just thought that technique could be used after Genesis into the day. I'll keep teaching, y'all keep coming, but I'm pretty happy I found this because I do a lot of those options. They expire worthless. And you get tied up, you look at it, and usually you jump out. In this case, instead of paying 8,000 bucks, you basically scratch it when it breaks, like I did. All right, Jonathan, what I'd like to do next, if possible, let's cover our schedule. Markets open Sunday night. We will not have a planning session Sunday night. We're going to meet Monday night. Now, Monday night at 8 o'clock, we're going to meet, be like it's Sunday night on Monday. We're going to open up our Futures First for an open house and do planning together on Monday night. In addition, I'm going to give a special prize to anybody that attends that listens to the penalty tape. Penalty tape is a tape I did many years ago. Yeah, Peg, I would. Now, the lost my train of thought. Hold on, let me grab it. Monday night at 8, we'll open up. But the penalty tape, I'm going to give a drawing, okay? I'm gonna give a drawing Monday night. John, can you put the link in the chat room for the penalty tape?
Yeah. That's the best way I could say it. Let's see. Penalty tape. Click here. There's the link. All right, I dropped it in the chat. And I'll put it on the slide here.
I just got to ask this question. People in my futures check your futures program Sunday night after 9, okay? And Jonathan, can you email that link to me? I'd like to listen to it myself. If you'll email it to me, I'll find it and listen to it.
Yep. I'll do that right now.
Give me something to do over the weekend. So here's what you can expect out of me. Sunday plan will be moved to Monday night at 8 p.m. A special drawing to those that listen to the penalty tape. We'll do it on the honor system. We'll draw Monday night. You're going to be really happy if you hear what I got to say. Monday after playing will be Futures Plus Education. And we'll open it up Monday night and talk about everything. We'll have some good stuff on Sunday night or Monday night. I want everybody to take a break from this, digest it, think about what you learned today, watch tapes, come prepared. We're going to have a good week next week. Now, today, the market is sort of going into the hold, okay? I want to thank all those people that bought Anchor. Thank you, thank you, thank you. Jonathan appreciates it. Chuck appreciates it. Adam appreciates it. All the people at DTI appreciate the fact you joined us on Anchor. I don't see anything else I want to talk about. Go back to the live trading slide. Get on board. Get on board and be with me the next 35 days. You might find out you can learn something no matter how good you are or how bad you are over the next 35 days. You saw the track record that we've got going. We're going to finish it out. It's worth every penny. Be there. We start on Tuesday at 1:30. Once we get through March, I'm planning on not doing live trading until I get to the end of the year. It's a big commitment for you to be there every day and me, but it's been very worth it to do. We've been doing it since October through March, and we're down to the final 30 days. So milk it as far as you can, because that's a lot of value there. A lot of value being in live trading. So, John, I don't have anything else to do or say at this time. We will not be doing a weekend side hustle trade this week. I'm going to pass on weekend side hustle. Jonathan's worked hard. Chuck's worked hard. Give them an early off and see how this thing wraps up. Happy Valentine's Day, Miss Carol. We miss you down here in Ponte Vedra. You're such a fun person to be with. Thank you very much. John, are you here? Is John here? Let me ask John and see if he's here. John, did you get that email we sent you? Check it out. I think you should, guys. If you don't get it, give me a call. Carrie, have a great weekend. David, if you're here, have a great weekend. Everybody have a great weekend. I'll see everybody on Monday night. If you're in TNT, look for some postings Sunday night and look for Futures First postings after 9 on Sunday night. Learned a lot. They dealt us a crazy bunch of stats, but the day was good. I'm glad we had the day. See y'all on the flip side. Thank you.